Assalamualaikum. My name is Bint-e-Atif. Welcome to Smart Commerce Classes. Today we are continuing the 7707 Summer 2022 paper of Accounting, Variant 21. Question 4. Iqua is a trader who sells household furnishings. She has provided the following information. Okay, we have to prepare the complete table. We have to calculate gross profit margin, rate of inventory turnover, current ratio, liquid test ratio. Okay. First of all, for gross profit margin, we'll be needing gross profit. Gross profit margin is calculated by gross profit divided by sales multiplied by 100. So in this question, we'll be calculating gross profit as written on 1st May 2021. The inventory was 1 to 800. That means opening inventory was 1 to 800. On at 30 April 2022, inventory was 14650. That means closing inventory was 14650. Purchases is this. Okay. Two 300. That is sales minus cost of sales. 1 to 800 is the opening inventory plus 72250. That is purchases minus 14650. That is cost of sales. That will give us 41900 gross profit. Gross profit. Okay. Now we'll calculate gross profit margin by 41900 with 112300 multiplied by 100. That will give us 37.31%. We have to write our answer into two decimal places, not to one decimal places, not to three decimal places. Only specific answer to two decimal places. Profit margin is calculated by gross profit minus expenses. So profit would be profit margin will be profit divided by sales into 100. So the profit will be 41900. That is gross profit minus expenses that are 19820. That will give us 22080. So profit margin will be 22080 divided by 112300 multiplied by 100. So the answer would be 19.66%. Now, rate of inventory turnover in times. That means we have to rate of inventory turnover is calculated by cost of sales, cost of goods sold divided by average inventory. If the examiner is asking for rate of inventory turnover in days, so we have to calculate it by average inventory divided by cost of sales into days. That means 365. If the question says that the days are 360, so we'll multiply cost of sales divided by average inventory by 360 days. Now, in times, we have to calculate cost of sales divided by average inventory. Average inventory is calculated by opening inventory plus closing inventory divided by 2. First of all, we'll calculate the cost of sales. That would be 1 to 800 opening inventory plus 72250 purchases minus 14650 closing inventory divided by opening inventory 1 to 800 plus 14650. That is closing inventory multiplied by 0.5 or divided by 2. That is same thing. This will give us 5.13 times. Then we have current ratio. Current ratio is calculated by current assets divided by current liability. So current assets are closing inventory, 14650, trade receivables. These are current assets, current liabilities are bank overdrafts and trade payables. Okay. Current assets are 14650 closing inventory plus 12700 trade receivables divided by 7125 trade payables, 5375 overdraft. That will give us 2.19 ratio 1. You have to write answer in ratio. Okay, liquid test ratio, we'll write current assets minus closing inventory. In this case, we only have trade receivables. That would give trade receivables. Okay, divided by current liability. One to 700 divided by 7125 plus 5375. Answer will be 1.02 ratio 1. Now moving towards B part. One of the Aqua supplier has offered to sell her a large quantity of inventory at a reduced price. Aqua is considering accepting this offer and increasing her expenditure on advertising in order to sell more inventory. Requirement B part. Advise Aqua whether she should purchase the additional inventory. Justify your answer by providing 2 advantage and 2 disadvantage. It is a 5 marks, so 2 marks for 2 advantage, 2 marks for 2 disadvantage, and 1 marks for recommendation. So advantage would be as she bought inventory at reduced price. That means cost per inventory is less, so she'll sell the inventory at lower price. So she'll be able to gain more supply, more customers, more revenue. More revenue. More revenue means that sales revenue will increase, and when sales revenue is increased, so the gross profit margin will be improved. Gross profit will increase, the profit for the year will be increased, the profit margin will increase. But disadvantages are, as she Equa is considering accepting this offer and increasing expenditure on advertising. That means expenses would increase as advertising expenses would increase. That means that the expenses will increase and the profit for the year will reduce. Demand of that type of inventory might be reduced. Inventory might be deteriorated. The storage cost would increase. The holding cost will increase. The wastage cost will increase. And advertising doesn't guarantee that Equa will be able to gain more sales. Okay, C part is explain the meaning and importance of the principle of consistency in the preparation of financial statements. So consistency is by using accounting methods or accounting principle consistently from one accounting period to another. That means we are using, mainly it is used for depreciation policy, that for a year, for one accounting period to another accounting period, we are using same depreciation policy of, for example, 20% on reducing balance method. By reducing balance method, so that is meant by consistency, principle of consistency. Importance is accurate comparison can be made from year to year. Accurate comparison can be made within within the industry averages and with the competitors. The profit for the year might not be distorted. D part is state two non-financial factors which may affect Equa's trading results. Goodwill can affect trading results. Location of the business, government decisions, competitors' action can affect the Equa's trading results. Okay. Question 5. This you and Soup club offers membership to people who are interested in sharing, sewing, and knitting patterns. It runs a refreshment cafe for members. The club had the following assets and liabilities. Okay. Requirement is prepare the subscription account for the year ended 31st December 2021, balance the account and bring down the balances on 1st January 2022. We have to make a subscription account. So for subscription account, we'll be needing balances, balance BD. Sorry. Okay. Subscription in advance. 2020 will show us the balance BDs, the opening balances, and 2021 will show us the closing balances. Okay, balance BD 1820, that means subscription areas. Subscription is our income. So subscription received in areas, that means this is an asset. 1820. Balance BD of advance or prepayment, pre-received, that would be 2260. Balance CD. Balance CDs are 1745 to 115. Okay. Subscription received, and we have subscription received. We'll write bank over here. That was any other, no, there is no other entry. So we'll close our account by income and expenditure. That will be 2260 plus 13900 plus 2115 minus 1820 minus 1740. Okay, will give us 14710. Now the totals are 18275, 275. So the balance BD on 1st Jan 2022 will be 1745, and 1st Jan 2022 balance would be 2115. Dates are important. 1st Jan, 31st Jan, okay. Moving towards second part. Explain whether the treasurer should be satisfied with the amount of cash received from member subscription during the year ended 31st December 2021. The amount received was less this year. The amount received was less than the subscription due for the year. And the subscription in advance have decreased and subscription in arrears have increased. And treasurer should not be pleased with this situation. Okay, moving towards B part. Calculate the profit on refreshments for the year ended 31st December 2021. Okay, we'll be needing closing inventory, opening inventory, 10701130. Then we'll be needing purchases. Okay, we have to calculate purchases by trade payables. Opening and closing balances are given. The cash paid to the trade payables for refreshment. Okay, cash is also given. So we'll calculate profit by revenue, that is 17650 less cost of sales, opening inventory, opening inventory is 1070. Then we have purchases that will be calculated by 1580, that is the opening balance of trade payables plus 10435 minus 19435. 1580 is the closing balance, 10435 is the payment that is given to the suppliers, then 1940 is the opening balance. So it will give us 1075. Okay, now closing inventory. That is 1130. So the amount cost of sales would be 10015. So 17650 divided by 10015 would give us profit as there are no expense related to the refreshments. So the profit would be 17650 minus 10015, that would be 7635. Okay. C part. Prepare the current assets section of the club's statement of financial position at 31st December 2021. Current assets. Okay. Current assets include trade receivables. There are no trade receivables, so closing inventory of 1070. Then we have closing inventory of 1130. Then we have other receivables, that means the subscription in arrears, that are 500 plus 2115. Rent paid in advance, 500. That is expense that is paid in advance. That will also come under current assets. Subscription in arrears will come under current assets. So that will be 2615. Then we'll have bank, that is 7447743. Then we have total, that will be 11488. Thank you.